Hey there, investors. The past few weeks in the stock market have been nothing short of a roller coaster. One minute we're celebrating record highs, and the next it's like the market's taken a sudden nosedive. But what's really going on here? Today, we're diving deep into the four key factors behind this market plunge so you can make sense of the chaos and protect your investments. First up, let's talk about the Federal Reserve and its aggressive stance on inflation. In July 2024, the Fed raised interest rates to their highest level in over 2 decades, aiming to tame inflation. While this helps curb rising prices, it's also making borrowing more expensive. Companies and consumers are feeling the squeeze, and that's one of the big reasons we're seeing stock prices drop. With higher interest rates, even risk-averse investors are flocking to bonds, leaving the stock market in the dust. Next, the U.S. economy is sending out some mixed signals. On the surface, things look stable. Low unemployment and steady GDP growth. But dig deeper, and you'll see cracks starting to form. Job growth is slowing, and consumer spending is beginning to cool off. With inflation eroding purchasing power and interest rates rising, the outlook is anything but clear. Globally, it's even murkier, with Europe's energy crisis and China's sluggish recovery adding to the uncertainty. Let's not forget about the geopolitical storm clouds on the horizon. Tensions in the Middle East are rattling global energy markets, pushing oil prices over $100 a barrel. Combine that with the ongoing conflict in Ukraine, and you've got a recipe for investor anxiety. When these tensions rise, investors often seek safer assets like gold, pulling money out of stocks and further driving the market down. Finally, we've got the Bank of Japan throwing a curveball with its unexpected rate hike in July 2024. For years, Japanese investors have been using something called the yen carry trade, borrowing at Japan's low rates to invest in higher-yielding foreign assets. But with rates rising in Japan, this strategy is less attractive, leading to a sudden outflow of capital from global markets. This ripple effect is another reason the U.S. stock market is feeling the pressure. So, what does all this mean for you? The stock market's recent decline isn't just about one thing. It's a complex web of factors that every investor should understand. By staying informed and strategic, you can navigate these turbulent times and turn market volatility into opportunity. Remember, it's not about avoiding risk, but managing it wisely. Subscribe to stay updated, and let's ride out this storm together. Happy investing.